following is an update and technical analysis on Sallie Mae, a giant in the student loan industry where a wave of missed student loan payments continues to loom, with student borrowers struggling. Delinquency rates could rise and the financial strain on households could ripple through Sallie Mae's bottom line, where investors and traders watch closely as the missed payments may result in higher defaults, directly impacting the company's cash flow and asset quality. If and when borrowers continue to falter, the balance sheets of giants like Sallie Mae rattling effect, possibly reshaping the entire landscape of the student lending. The question remains, in how will Sallie Mae completely navigate through this reckoning, and talk about a key pivotal structure within the technical realm of the stock, where we have a massive correlation of the 200 exponential moving average with major reactionary lows, highs, and right across the board. You'll see even a back test. You'll have additional major reactionary low reaction, reactionary top. Very psychological level with a huge imprint on a solid red candle infused big breakdown sell signal, resulting in additional big crash, 30% crash at the downside, cuts through a whole ton of wicks and reaction, completely undercuts through a gap in additional reactionary highs and lows. You get the picture, just an insane multiple gap inflection point that has been a historical feat and or buying pivot zone with a complete bullish green infused big breakout candle close above its exponential moving average. It was off to the races in a big way. And what I currently see is a potential head and shoulder with your left shoulder, head, classic look at right shoulder, and a neckline. That will be the correlation of the 200 exponential moving average. And that could be all eyes on the biggest inflection point that we have seen in quite some time, with you have additional negative and bearish divergences that have just continued to construct and establish on all four key technical momentum indicators. And that has been a very large telling inflection point where the beginning stages damage is being poured straight into the momentum indicators on all walks of life here in the moving average convergence, the oscillator, stochastics, a 1033 custom indicator, and of course your relative strength index. That was the precipice for a major big selling down below. You had a snapback counter trend rally formed the right shoulder, and here you are standing above the 200 exponential moving average, major 1963 price support. And that will be the biggest inflection point with major reaction really across the entire sphere there. Short sellers, bear traders, they want to see a solid snapback, have a false trap in a ton of long traders and or bull traders off this key inflection point, only to have a very violent rejection on a solid daily infused candle close, big breakdown below the 1963 and the 200 exponential moving average would issue in a definitive breakdown sell signal, increasing the odds on a complete all-out puncture of the neckline to the head and shoulder top, bearish continuation formation on a much larger drop to retest the 1826 price support with an additional air pocket down below. I would only suspect a ton of margin calls, stops to go off, and a forced liquidations, and an all-out cascading capitulation phase down to the 1681 and 1628 price support if and when some of these key inflection points were to go with conviction. Long traders, bull traders, they want to continue to defend the 1963 price support level, which was bid impulsively off that major reactionary low, only followed by a very extreme infused green big breakout candle up above, automatically deflecting off its neckline with now a ton of support down below, including the 200 exponential moving average, your 2006 price support level, which has additional big major reactionary highs and lows across that entire realm there. Just a triple transitioning point of price support levels, ultimately re-challenging the 2211 price resistance in correlation of that previous reactionary highs, and ultimately the gap that was backfilled in anticipation to take out the 2211 price resistance level on an all-out short squeeze down up to the 2292 price resistance and the minor price resistance of 2373 of those previous reactionary all-time highs. Meanwhile, I will be waiting patiently for a potential big breakdown sell signal. If and when student loan payments continue to falter, Sallie Mae could feel the additional impact, rising delinquencies, and potential defaults threatening to erode its financial stability as borrowers struggle to meet their obligations, where the missed payments could shake Sallie Mae's foundations, challenging its future in an uncertain lending market, only to play out perfectly within the technical realm of an unchecked and unfilled gap down below.